This is the Friday, December 22nd, 2017 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, hello.
Hello. Thanks for having me.
Thank you for spending your pre-Christmas time. I know sometimes people want to be out of the house before Christmas. Is that what this is all about and why you said yes?
No, I just love being here so much.
Yeah, I can see that. I got you wound up during the show. You don't have to take it out on me now. Tom, we're going to start with some of those great questions that we got. If you want to find Tom on Twitter, he's at Tomm Pfitz. And always fun to see what people write in. And we're going to start one of our Facebook questions here, Tom. This is Chris in Wisconsin. And he's asking, what is the better marketing strategy for 2018? To either be aggressive cash seller and re-own or be patient and just purchase a put?
Here's the question I don't understand, is why re-own it? If you think you're up at a good price and you want to make a sale and get the stuff moved, why would you re-own it? You're selling it because you think it's not going up anymore. So you've made a sale at a price that's not all that great, and then you've decided to undo it by re-owning it. And I don't understand that. Now, maybe if we drop 60 cents after you've sold it, then maybe you look, but to go in and re-own it doesn't make sense. And the other thing is about buying a put, you go out and buy a December put, you're paying a ton of money for time premium. By the time you subtract the time premium, subtract whatever basis, you haven't really locked in all that much with your put. Now, I think you need to do some kind of a combination, whether you buy a put, sell a lower put, do that and sell a call, do some combination, because you're buying a ton of time premium and you've got to find some way to knock that down.
You have a floor, but you don't want to have two floors? Is that kind of what you're saying?
Well, I mean, we know that, I believe that 380 is probably a pretty good floor, but I also don't believe we're going under 320. So you buy a 380 put, sell a 320, lock in that range,
sure,
and it knocks some of the costs down of the put that you bought. I also don't think we're going all that high. So you sell a 440 call or 430 or 450, some higher call, and use that money that you collected off that call to offset the cost to your put. So you can get that put cost down so that it actually does you some good. Now, I know everybody, well, what if we go up through 450? Then you've got, well, you can't sell the call and then ignore it. You got to pay attention to what's going on. But I also believe that going to 450 for corn wouldn't be the worst thing that could happen to farmers now. So, there's things you can do without just making a sale and re-owning it and undoing everything you did by making the sale.
How realistic is 450?
Not very.
Well, what would be the ingredients to get there? I know we have a huge amount of crops sitting in bins, sitting on the ground.
Right.
A lot of fundamentals are not in our favor right now.
Somebody's going to have a crop problem someplace. And the other thing, and everybody's, oh, what if we have a crop problem? Okay, how are you going to convince the trade that you've got a crop problem after what happened last summer?
Right.
The trade's convinced that we can grow a crop no matter what happens. So we're going to have to get well into the summer and really actually see that there's no crop before the trade's going to get all that excited about it. I mean, I'm not saying they won't have little 10, 20 cent rallies, but to go worrying about your 450 call, something serious is going to have to happen. When you've got the kind of carryout we've got, we may be having a little trouble with ethanol profitability. We may not sell as much corn as we think. And does there anybody believe that there's some big demand thing on the horizon that's going to sop up all this corn? Maybe in 10 years, the Chinese are going to buy corn. I mean,
it's a long way.
We'll react when that happens. But
all right. No, it's a good point, and that's the only reason I asked. I think it's important to hear those things, and it's important for you to get your take. I forgot to ask you about cotton during the broadcast. I need to ask you now before we move on. Cotton, last week was fairly even. This week, what's going on there?
I thought 75, 76 was going to be a heck of a good price for cotton. We got up to 78, almost 79 this week. I mean, that's a good cotton price.
It's a good chart.
The demand's up there. I mean, there's a real good demand. The crop was so-so, but sustainability of cotton prices above that level seems pretty low to me.
Okay. Well, let's talk politics, even more fun. The tax bill this week, not as much for rural interests as it was maybe city interests. But the question from Matt is asking via our Facebook page. He's asking, is the tax bill going to prompt food processors to buy more commodities?
Number one, I don't know, but I guess I'm not sure why it would.
Yeah. It doesn't give you any reason to, only maybe if they're going to expand operations. There's more people are buying more food or buying things that you get from a processor.
Right.
That's about the only way I would see it.
What's going to trigger them to do that? I mean, they've got to have something incentivizing them on the other end, and I don't know what that would be by the tax code.
Okay. All right, let's talk dry conditions now. Kylo is asking about dryness in Oklahoma and Kansas, and he says due to the dryness there, lots of wheat pasture cattle have already been sent to feed yards. Most aren't optimistic about spring wheat pasture. How does this impact the feeder market now and then also in the spring? Well,
you and I were talking between the broadcast and this, is that it basically explains what I was talking about on the show, where you got that $6.50 drop in the feeder market, and then the cattle on feed report surprised the heck out of it, except maybe him.
Well, I think that question came before the report, just to be fair to Kylo.
That we had a big, huge placement number, and I think that's why, is because of those cattle coming off wheat country. Now, how that affects the wheat market, it certainly, if it stays dry like that, is probably going to diminish planted acreage of wheat. The question then becomes, does that matter?
Yeah.
And if it starts to rain, are they going to plug beans into some of those wheat acres, and is it going to jack the bean acres? I mean, there's some moving parts to all that we aren't going to know till March, April, May.
Well, I know we discussed 108% on cattle, and it was 114% on feeders for placement.
Correct.
Earlier in the week, feeders really had a bad day Wednesday. Is that what was moving it that day?
I don't know whether it's the recognition of what he's talking about,
Sure.
of a lot of calves moving into the feedlots because of that. I don't know. You never know what prompts traders to do thing on any given day, but.
It's just the $3 caught my attention. That's the only reason. All right, let's ask about Brock here. Brock in Baxter, Iowa, asked via Twitter. He's at Hanson Ag, and he says, continue with our dry theme here. He says, the 18 crop already starting with minimal subsoil moisture. Even if we grow a ho-hum crop, we still have that large supply. Is that a good recipe for prices? Good recipe for disaster? What are those ingredients?
Well, number one, not everybody has a lack of subsoil. Number two, if you're going to have a drought and lack of subsoil, let's have it in December, January, and February.
Good point.
A lot of farmers say they don't want their subsoil to be much more than 70% at this time of the year, because then it allows for spring rains to fill you up without overdoing it. So I'm not going to get all that excited about corn because of dry weather in December and January. And I don't know. And like I said a little bit earlier, the trade's not going to be all that concerned about that because we grew a crop on who knows what last year. And I know Brock's going to come back and say, well, we had a full subsoil tank of water last summer, and that's absolutely true, and I think that made a crop for us. So that's important, but I think it's a little premature to start worrying about it.
Well, you had said earlier, and I want to ask, I was going to follow up. Well, I'll follow up now instead. Even if you have a dry May, a dry June, you got to get pretty far down the road for a dry July. Correct. Before they'll notice in Chicago. Is that what you were saying?
That's what I'm saying. Now, there's some talk about this La Nina, if it develops, lingering up here and causing us some troubles. But most people don't expect that to last past March or April. And maybe all that lingering La Nina does is gives us great planting conditions, and then it breaks up and we get rain again. So I mean, it's hard to get too excited about it. With the carryout we've got, it's hard to get too excited about a big upside in the corn market, is all I'm saying.
Sure. And you subscribe to the theory of if you plant in dust, your beans will bust, or your bins will bust.
Well, that's the
theory. If it's true or not, I don't know.
Correct. It is if it rains in the summer.
That is true, and if it doesn't, we're all in trouble. All right, thank you, Brock, for that question. Let's ask here from Bradley in Upland, Nebraska, and we've kind of skirted around it a little bit. Soybeans off 50 cents since that high. They got right above $10, just dropped. How much lower can the nearby contract go?
If in fact we have a Brazilian crop that's up at that 112 to 114 range, if in fact we have a planted acreage up here of 91 approximately million and no big problems, then I think you're probably at some point looking at 880 to 920 on beans. So
sub $9 is a very real scenario for you.
Yeah, oh yeah, absolutely. I mean, we're probably going to bump the carryout again because we just can't seem to live up to our export projections. So I think you're going to see the carryout probably slip up to 450, 465, somewhere up in there, maybe higher, just starting off, and then you dump a big South American crop and put prospects up here, and I don't know what supports beans.
Right. Well,
the other thing is the funds went from being long about 65,000 contracts to flat by the end of this week to maybe slightly short. The fear is what if they decide to establish short positions in beans like they have in corn and wheat? What's that is that knock another 50 cents off just by virtue of them doing that? I mean, that's one of the hazards that's sitting out there for people sitting long the bean market.
Well, and you look at meal off 390, it was oil and a little bit of meal that was kind of helping that rally in late November. And now where's that gone?
That's because Argentina exports a lot of meal. So they were buying the meal market as a hedge against an Argentine crop problem. My concern there is, number one, China has cut off DDGs. Number two, we're producing, have been the last 3 weeks, record levels of ethanol, which is generating extraordinary amounts of DDGs. The China market for DDGs has been cut off. That competes directly with meal. So, you know, the upside potential to me in meal is not that great just because there's a lot of protein available.
Okay. Oh, and we're cheap, as you said during the show.
Yeah.
We're the cheapest on the planet right now for when it comes to grains.
Correct.
All right, last question. This one comes Chad in Dunbar, Nebraska. It's very similar to what we've already been talking, but I'm going to ask a specific question, or Chad's asking a specific question. How much longer is the South American weather to impact U.S. marketing? Are we at a 2-week period, a 2-month period?
Well, I think 2 months. You know, it's kind of tricky because Argentine corn pollinates from the middle of December till early April. So, I mean, it's not like here where we got 2 weeks in July that we wring our hands over and then it's either good or not. It's spread out over a long period of time. And then we have to look and see how late does the harvest go in Brazil, and is that going to impact the planting of the South American safrinha or the Brazilian safrinha crop? So I would say probably most of that's going to be out of the market no later than mid-March.
Okay. So we still have a ways to watch.
We do.
Yeah.
Yeah.
All right. Anything else, Tom, that's on your mind that you want to speak about? Now you have the open mic.
I think we hit the...
We hit a lot.
We hit the highlights, yeah.
I appreciate it. Tomm Pfitzenmaier, thank you so very much for joining us.
Right, thanks, Paul.
And we have received an early holiday gift for our Market-to-Market classroom project of a video question. However, we are gathering more to launch a series in the new year. If you want to be a part of it and want to give the gift that keeps on giving on the internet, we're looking for current students to submit their big picture commodity questions and have them answered here in Market Plus. Send us your questions in video form. You can direct message us on Twitter or send us an email to market, all, 3 words is one, at iptv.org for details. And join us again next week when we'll explore the big stories of 2017, and Elaine Cubb will sit across from me here at the Market-to-Market table. And one more thing we need to pass on here before we go. Mike Pearson resigned on Monday after a little more than 5 years as the host of Market-to-Market. All of us here at Market-to-Market want to thank Mike and wish him well in the future. Thank you so much for watching, listening, or reading. I'm Paul Yeager. Happy holidays and have a great week.